Okay, what's going on, everyone? This is the one that I wanted to get to today. We're going to talk about SR NASDAQ 2022-004, and this is talking about duly listed companies. Now, duly listed companies, we'll get to that in a second. This document is scheduled to be published in the Fed Register on 2/1. Hey, that's my birthday. It's my birthday tomorrow. Yoo-hoo! Anyways, this is SR NASDAQ 2022-004, self-regulatory organization. That's what the SR stands for. The NASDAQ stock market, notice of filing and immediate effectiveness of proposed rule change to amend the exchange's listing fees at Rule 5910B to adopt a $15,000 all-inclusive annual listing fee applicable to a duly listed company. And this was filed January 26, 2022, so last Wednesday. So the purpose. The purpose of this rule change is to insert language concerning the relevant all-inclusive annual fee applicable to the listing of securities that are listed on the New York Stock Exchange and designated as national market securities pursuant to the plan governing New York Stock Exchange's securities at the time such securities are approved for listing on the NASDAQ Global or Global Select Markets, and maintains such listing designation after it lists such securities on NASDAQ, which, they're calling duly listed securities. So such language was erroneously deleted in a previous filing. And then these super notes here just link you to the previous filings. So basically what all this word salad means is they want duly listed companies to pay an all-inclusive fee of $15,000 at the time they are approved for listing on the New York Stock Exchange or the NASDAQ. Now, a duly listed security, it's literally how it sounds. It's a company that can list its shares on more than one exchange, which is referred to as dual listing. Now, the main advantage of dual listing is to access additional capital and increased liquidity. A popular way for non-US companies, again, non-US companies, to dual list in the US is by using ADRs, or American Depository Receipts. American Depository Receipts are the most popular. Brazilian Depository Receipts are another example. I'm sure you remember the whole BDR situation with AMC. And again, non-US companies. So, in 2014, NASDAQ adopted an all-inclusive annual listing fee schedule to simplify, clarify, and enhance transparency around the annual fee to which listed companies are subject. The new annual fee schedule became operative on January 1st, 2015, and applied to all companies listed after that date. Effective January 1st, 2018, all NASDAQ-listed companies became subject to the all-inclusive annual fee, and the standard annual fee schedule ceased to have applicability or effect for such companies. In lieu of the annual fees applicable to a NASDAQ-listed company, a duly listed company annual fee was set at $15,000 per year. Such annual fee was set to be assessed on the first anniversary of the company's listing on NASDAQ. While not identical to the current all-inclusive annual listing fee schedule, this provision was similar in that companies also were not subject to fees for listing additional shares or for substitution listing events. So, Supernote 7 here just means former Rule 5920C8 also included similar language about the fee for a duly listed company on the NASDAQ capital market. However, under Rule 5005A11 and IM-5220, companies are not and were not previously permitted to duly list on the NASDAQ capital market. As such, this capital market fee was inapplicable to any companies and its deletion was appropriate. This one here just refers you to another rule. We're not going to look at it now. We're just going to move on. So, NASDAQ believes it is appropriate to maintain the $15,000 fee on an all-inclusive basis because it is not the primary listing venue for such companies. Again, foreign companies, most of these are out of, all over the place. You have from Brazil, China, Japan, you name it. The dual listing program was originally designed and continues to operate to encourage NYSE-listed companies to compare services provided by NASDAQ and NYSE without creating undue burden by assessing duplicated fees. As required by listing rules, NASDAQ monitors duly listed companies for compliance with NASDAQ listing standards. So this is what I want everyone in the group to pay attention to. Ignore all the bullshit media hype narrative around China. Listen to what the SROs, the ones in control, are telling you. In that regard, based on NASDAQ's experience, duly listed companies require less time and less effort to review and to ensure compliance because they seldom involve time-consuming regulatory issues. Boom! This in part due to the fact that NYSE-listed companies are already subject to the ongoing scheme of regulation by the NYSE that is fairly similar to the NASDAQ's regulation regime. Now, notwithstanding the similarities in regulatory regimes, the dual listing program increases the regulatory burden on a listed company, in part by subjecting it to both the NYSE's and the NASDAQ's corporate governance regulations. As a result, the program targets bigger and better established companies that are used to being a public company and can afford to moderate increase in the regulatory burden. NASDAQ believes that these larger companies will pay higher listing fees if and when they become listed exclusively on NASDAQ and become subject to the fee schedule applicable to NASDAQ-listed companies, thereby making their listing more valuable to NASDAQ. NASDAQ also believes that inducing these companies to compare services provided by NASDAQ and the NYSE may encourage these companies to list exclusively on NASDAQ and to provide its listing market broader benefits from attracting the larger, better-known companies that are listed on the NYSE. Accordingly, given the competitive nature of the dual listing program and the potential benefits it may bring to NASDAQ and its listing market, NASDAQ believes it is reasonable to set the all-inclusive annual fee for daily listed companies at $15,000. And then this is the new text of the actual filing itself, the new rule text itself. It reads this: dually listed companies whose securities are listed on the NYSE and designated as national market securities pursuant to the plan governing New York Stock Exchange securities at the time such securities are approved for listing on NASDAQ, $15,000. Such fees shall be assessed on the first anniversary of the company's listing on NASDAQ and annually thereafter on the anniversary of the company's listing. If an issuer of such securities ceases to maintain its listing on the New York Stock Exchange, that portion of the fee described in this section, attributable, fucking A, to the months following the date of removal. The 6 of you that made it this far in the video, I'm retarded. Anyways, attributable to the months following the date of removal shall not be refunded except if the securities remain listed on the NASDAQ Global or Global Select Markets and are designated as a national market securities pursuant to the plan, blah, 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 blah. Anyways, that's it. Yeah, ADRs, they're regulated and they're easier to regulate. So, yeah. To the moon.